All right, thank you very much, Dr. Moses. That was amazing. There's a few things that I thought were quite interesting that I'd like to touch on. I mean, like we've also talked about cross-border, and we're very excited about that, and very excited about how cross-border real-time payments is going to evolve, particularly in a country like Tanzania, which is so far advanced of other countries. Talking about skills and innovation, you mentioned a few times innovation happening in this room. There are other rooms in Tanzania where they're actually building this. That's where the innovation is happening. We're very excited about bringing the innovations that Tanzanians are building into TIPS back into the rest of the community, so that we can have that shared learning across countries that you mentioned. That is really the purpose of what we're here. We're not here to say that this code base is the most important and perfect code base in the world. It's that all countries need inclusive instant payment services for their citizens. And the world would be a better place if we were to collaborate on those systems. Whether or not we think that this particular line of code is the best is a minor issue that we need to overcome. Making sure that we have a room where countries can collaborate and make sure that we're all moving in the same direction is exactly what we're here for. So, what are we here for? Next thing we're going to do is have a little bit of an existential conversation, which I'm actually leading, not Michael. For those of you who ever had an existential conversation with Michael, they can be quite interesting. I would highly recommend that you have one this week. You may not show up to the next day, though. So, before we get started into what is an inclusive IPS and how do we measure it, I'm also going to talk during this session about the messaging, not just what is an inclusive IPS, but what is Mojaloop and how does Mojaloop respond to the need for an inclusive IPS. First question, how many people in this room or online, besides Paul, have heard the expression IPS? Please raise your hand if you know what an IPS is. Okay, thank you. Now, trickier question. Please raise your hand if you don't know what an IPS is and you're willing to admit it in front of everybody. Who does not know? Thank you, awesome. There's some people with some courage back there. Does not know what an IPS is. All right, an IPS is an instant payment system. Sometimes we use the term RTP. Okay, now I can see myself and it's frustrating. Sometimes we use the term RTP, real-time payment system. Sometimes I've heard some people say RTRP, real-time retail payment system. And some people are using the term inclusive IPS or instant payment service. The jury is out. We are a community. We get to decide all together what we're going to use. However, for the purpose of simplicity, we're going to talk about IPS. I happen to be a big fan of IPS these days because it's a very easy transition to say IPS and IIPS, which is an inclusive instant payment system or service. So how do we know if it's inclusive and how do we measure it? Now you actually have to contribute. It's not just going to be me talking. I want to hear from you. What do you think makes a instant payment system inclusive? What does it mean when we say it's inclusive? And if no one wants to answer, we're just going to stand here and look uncomfortably.
Low cost.
So, can you stand up and say it again? Do we have a
low cost? Okay, it's on. It needs to be low cost because if it's not inclusive, people can't afford to use it. So
you're talking about the cost of a transaction.
Yes, okay. Low transaction cost.
Okay, so low transaction cost. That's a really good indicator, I would say. Another one. Thank you. Sorry, please introduce yourself as you.
Okay, I'm Elijah Okello from Uganda, a software engineering student. So I think what makes an IPS inclusive is how easily people can access it. Yeah, like the ease with which people can actually have maybe some sort of transaction happening on there.
Okay, awesome.
Hi, Banman from Terapay. Everyone must be able to participate in the scheme. or in the system.
That's a great one.
John with your African Ender. Just to supplement what he said, everyone in terms of people by gender, but I would also add different types of financial service providers. So not just banks or mobile operators, but MFIs, community banks, and so on, as peers on the system.
Awesome. Thanks, John.
I won't bother to get up. Greg McCormick, Fraud Systems Center of Excellence. You basically need to, everybody's talking about the right thing, but one of the big barriers has been all the paperwork that you have to do to actually get an account to get on the system. So it has to be easy to join. Your identity has to be known, and that has to be easy for you to join the system. So that can become a barrier.
Good. Yeah, that's a great little nuance that I think I'd like us to really dig into. Thank you, Greg.
Yeah. Hi, my name is Amit. I think IPS would be inclusive if it is actually designed to be used or usage driven for the group it is designed to be used. If it is for business payments, then businesses need to be able to actually use the service. If it is designed for retail customers, then it is usable by those customers. So I think that's this is important.
Usability is quite important. Thank you. And often forgotten.
Michael Richards from Mojaloop. It shouldn't require its users to possess a particular kind of device in order to access it.
So I will just say there was a presentation this morning at 8 for those who made it. There were some answers to this question, but I'll throw in identifiers beyond just the phone number. So a variety of identifiers that you can use to access the system and address payments.
Tatu Mikidadi, Ministry of Finance, Tanzania. It can be accessed anywhere. Location doesn't matter. That is an inclusive IPS.
Awesome.
Hi, just trying to think of the things that we haven't thought of yet. Paul Baker from Infotech. It shouldn't tie up your money at all. It should clear immediately. Money should be freely moving between institutions.
Awesome.
As a reminder, introduce yourselves.
So Sajid, before you go, I want to make a good point on that Paul just made. It should clear instantly. Now, that's an interesting thing that an instant payment system does clear instantly. That's by definition. And so this is one of the things about the level 1 principles, and why we want to have this conversation is because there are parts of the definition of an IPS that I think are inherently going to drive inclusion, but we have to go beyond that. And I mean, it was important for you to bring it up also, thank you. But what we also want to look at is, cool, but not every IPS is going to be inclusive. So we want to make sure we are saying all IPSs will have this, and that's awesome, and that's going to drive inclusion. But we also need to know what makes a non-inclusive IPS. So thank you, Paul, for bringing it up. That was an important one I was waiting for. Sajid, please.
Sajid Azad, UNCDF Myanmar. I think that inclusive part is not just for clients, but also decision makers. So DFSs can join and leave without destabilizing the system.
And this is why we have Sajid in the room to talk for policymakers.
Anybody else?
Hi, this is Sam Kumari from the Mojaloop community, also from Infotech. A lot of good points, and as Matt said, a lot level 1 principles, but quickly getting to the answer. It also should cover a wide variety of use cases so that whoever is adopting it can customize it to the use cases in their market.
Awesome. Related to what Amit was saying about having, no matter what you're using it for, it should be suitable and should be usable. Thank you.
Well, I'm Eric from Institute of Accountancy Arusha. For me, I think an inclusive IPS is the one that is applicable for all ethnic groups. Doesn't differentiate or doesn't categorize a group of participants. It should be applicable to anyone in the community.
Okay.
I think they're tapped out.
Okay, thank you so much, everybody. All right, so I'm going to go home and think about that and come back when I'm ready. I really want us to be thinking about that. This is something we constantly need to reassess. Those of you who know my history and how I ended up here, I became very fascinated with the level 1 principles while working for some folks that were not so fascinated with the level 1 principles. And that's what really drove me into this community. And that was 4 years ago. And so I live in India. A lot of you will hear me talk about this all the time. The transformation we've seen of real-time payments and IPS in India over the past couple of years has been insane. And I think that's been all over the world. When I first met Miller and we started talking about the level 1 principles, since then, we've seen a growth in IPS around the world. And I think the nuances that we want to talk about now are really going to dig a little bit deeper into what we've learned from the rest of the world in terms of how IPSs are growing. And again, there are a lot more IPSs than there were when I first started on this journey 4 years ago. But not all of those IPSs are inclusive. And I think it's a good time for us to start looking at around the market, around the world and saying, cool, this is one that is inclusive. This is one that is not inclusive. How do we differentiate those? I do want to make sure I still can control my slides from here, right? Okay. So the first thing I want to talk about before we get into the measurement, now that we've had a great conversation about what is an IPS, I need to go back to these. What is an IPS? I want to talk a little bit about the messaging about what is Mojo Loop. Perfect, thank you. Now, if you don't know what Mojo Loop is, you might be in the wrong room. However, what we're not very good about is being clear about when we talk to people outside of this room, what is Mojo Loop? I think it took me my first convening of 4 days to actually start to understand what is Mojo Loop. Unfortunately, when we talk about this to the outside world, we don't have 4 days. We sometimes have 20 seconds. We sometimes have 3 minutes. And so for us to have a more clear understanding of what is Mojo Loop and what is the value proposition of Mojo Loop, we're going to work on a little bit of talking through some of our messaging. This is by no means official. This is the first time we're expanding this to the wider group. We've been working on it for about 6 months now, which is hilarious when you see that this is the 3 slides I've worked on for 6 months of my life. So the purpose of why we're going through this messaging is, number one, to focus our product development. I've talked about that in the last time I was up here a few minutes ago. This is really about making sure we're focused on the resources we have on improving the product. It's to define the key value propositions so that we can use it in our general marketing. Very few people land at mojooloop.io and be like, oh, I know what that is and I want to use it. Very difficult to explain. Humans, some of you are better humans than me. I can only absorb things 2 to 4 ideas at a time. And so we have to make things much, much more simple. And also agreeing on the language. We all talk a very different language. It doesn't mean that when I'm talking to one potential adopter and Warren's talking to another potential adopter, we have to use always the same language. They're different adopters, different countries, different use cases. They're going to have a different desire for it. But there should be some fundamentals that we all agree on that should be applied to everyone when we describe this is what Mojo Loop is and this is the value it brings to you. The purpose is focus. We need to have focus on how we talk to people about Mojo Loop. So, sorry, this is not a value proposition. It's the wrong title. Mojo Loop is a real-time clearing and settlement open source software for hub operators running instant payment systems. Full stop. I know that is obvious to a lot of you. Say, yeah, but it also does this, and it also does this, and it also does this, and it also does this. We have to start with our first sentence being clear, because believe it or not, there are a lot of people who have heard of Mojo Loop and maybe even spent 5 minutes thinking about Mojo Loop and don't know this. So having a clear statement about what it is and who it's for, it is for hub operators. Okay, what about central banks? Bank of Tanzania is not a hub operator. Yes, they are. They are building hub operations within the central bank. A lot of central banks are doing it. They're a hub operator. It is a software for hub operators to build instant payment systems. Inclusive instant payment systems. There's a word missing. So Mojaloop has 4 objectives, ways in which we help hub operators drive financial inclusion. Help hub operators drive financial inclusion is important messaging I would like to get through. There are a lot of hub operators out there that would love to drive financial inclusion, and they think that we are their competitor rather than their enabler. It's important for us to make sure that our messaging is clear. We are helping enable hub operators and regulators drive financial inclusion. It is their mission to drive financial inclusion. We are the enablers of that. We do it through local ownership and having vendor choice. We do it through low cost for very low value transactions. Again, that is very obvious to a lot of us, but I've had several people say, so is this for high value transactions or low value transactions? I thought it was clear in the first 5 minutes I was talking. No, it's not. And so I want it to be up there right up front, very low value transactions. Even putting a number in, sub-dollar transactions is what we are really focused on. Lower cost and risk for different classes of DFSPs. There are about 4 of you in the room who were part of the conversation that got us to that sentence, and none of you are happy with that sentence because so many of you argued, no, it needs to include this, it needs to include this. We've got to be clear and just simple. There are a lot of nuances to that sentence. It's very deep, but that has to be a very clear one. And I think, I hope that everyone can see that the conversation we just had, we answer the need for an inclusive instant payment system with those first 3. And so I hope that we can see that that wasn't just something randomly came up with. We are generally in agreement in this room that this is what we're offering. Now, if you would like to add something to this, please reach out to me. If you'd like to take something off this, please reach out to me. However, 4 messages at a time is all a person can include or can absorb, and 1-line bullets. If anyone has a better idea for how we can get to 4 1-line bullets that more accurately describe what Mojaloop brings and how we drive how we help hub operators drive financial inclusion, I really want to know. My only thing is this one slide does not get deeper, more nuanced than this. There is a million directions we can go from this. So the last one, integrated support for a local fintech community. And what this means is these are locally built systems that local system integrators are building, and local fintechs are able to connect to through third-party payment initiation, which again is a headline for us for the next year. And that's where we focus on. So these are the ways in which we make it more inclusive. You'll start seeing this slide a lot more. Those 4 are all there. The key messaging is there. So how do we do that? Again, 2 to 4 things. We do those 4 things 2 ways. It is open source, and we've designed it. We've put some very specific design principles into Mojaloop. 2 things, open source and the way it was designed. It is open source, and we're not going to argue on the word licensing. I'll take that out. Lower change and modification costs, the benefits of open source, lower change and modification costs, fee structures that match policy and rules. For the policymakers in the room, we are not just saying technology leads policy. We're not saying it should be free, although most people have agreed it would be more inclusive if it is. However, we are making it so that the fee structure can actually match what your policy is, no matter what you've decided it is, that the technology should not drive that. Reducing the barriers to participation. We've talked quite a bit about that through open integration and participation tools. So more financial institutions, the MFIs, when we talk about it should be anywhere in terms of geography, when we talk about it should be all financial institutions, all people, meeting citizens where they are, who they currently bank with or transact with is how they should be able to connect into a payment system. They should not have to open a new account if they already have one in order to transact on the payment system. And opportunities for local SIs and fintechs to support. Again, that is one of the benefits that we get from the open source. The design decisions. This one was another one that was very challenging. Equal participation of big banks, small banks, and MFIs without creating risk through security and liquidity management. Again, for those of you who know, that is a very packed statement. identification of recipients by fundamental personal attributes. We heard that rather than bank accounts. That's a very interesting innovation of Mojaloop that we often take for granted, that when we talk outside of the Mojaloop world is actually quite cool. Fewer human interventions for disputes, particularly in low connectivity areas, with asynchronous communication and verifiable pre-agreed terms for execution. I still don't like this because it's too long. Anyone has any ideas to shorten it, please talk to me. But again, very packed with an important design aspect of Mojaloop, and third-party payment initiation for fintechs to join at the scheme level. Those are some design decisions of Mojaloop that we think are innovations that are the things that make it inclusive, that are the things that make it an inclusive IPS, not just an IPS. There are lots of technologies out there that can make it an IPS. We think these are some of the key things that make it an inclusive IPS. All right. So thank you for listening to this discussion about what is the messaging. How are we doing on, Kim, how are we doing on time?
Good.
So we talked about what is an inclusive IPS, hopefully a better understanding of how we're trying to talk about how Mojaloop offers countries to be an inclusive IPS. Now we're going to talk about how do we measure what an inclusive IPS is. And are we going to be able to?
This presentation is in downloads.
Say it again?
Is Philip now? Yes. Philip, this presentation is in downloads.
Okay. Can you take care of that? Oops. Oh. It's not showing up here. Sir.
Present this one. This one. This one.
Okay, so while we talk about while they're saying this stuff, we're going to talk now about how do we measure an inclusive payment system. And before we get into that and I introduce the speaker, I want to talk a very quick anecdote about an impact investor that I met a couple of years ago, trying to figure out, and this is a very successful impact investor who was running a fund of hundreds of millions of dollars. And I was trying to figure out, because I was going to start a small fund, how do we measure our impact? And his response was, for example, one of our portfolio companies makes eyeglasses more accessible to everyone at a very low cost. I wear glasses, and this is him speaking. I wear glasses, and my life with glasses is better than my life without glasses. Don't waste any money on anything more than that when it comes to measuring impact. So if any of you have $100 million that you're going to put into Mojaloop, I'm willing to entertain that conversation with you also. But because none of you have that, we need to understand a little bit better what impact we're having on the people that we're trying to help serve. We can't just assume more people have access to financial services, therefore life is better. We have to go much deeper than that to make sure we're actually doing what we're here to do. And again, but that's not to discourage. If you have $100 million, please come and talk to me. Oh gosh. Probably this one.
Yeah.
Okay.
Put it in presentation mode, then share it.
Okay, perfect. I think we just go to presentation when we should be fine, right? All right. So first, yeah, perfect. Okay. So I'd like to bring up Phil Ressler. He is an associate professor, as you can see, at William & Mary, working with Innovations for Poverty Action. If you haven't read the report that they've just released, which Phil, I think you're going to talk us through, please go out and do it. It is the most up-to-date thing on where we stand with inclusive instant payment systems. And so with that, I'll hand it over to Phil. Thank you.
Well, good morning, everyone. Thanks so much to Mojaloop Foundation for inviting me to speak with you all. It's quite an honor. So I come from William and Mary University in Virginia in the United States. So I study the political economy of development. I'm also the co-director of the Digital Inclusion and Governance Lab, very much interested in the impact of digital technology on social and economic development. So we're very much interested in instant payment systems, focusing on their societal and economic impact. So that's what I want to talk about today. And so just a slight kind of shift in framing. What we're interested in is not measuring whether an instant payment system is inclusive. We're interested in measuring whether it has inclusive impacts, right? Whether it's increasing, digital inclusion, financial inclusion, improving socio and economic outcomes, right? And what will be interesting is whether the design, an inclusive design, outperforms non-inclusive designs. It's something that we can test. But I'm part of a research group at Innovations for Poverty Action. So IPA is a research organization that I'm sure maybe many of you are familiar with, which uses rigorous research methods, especially randomized controlled trials, to try to alleviate poverty, reduce poverty. And it says low battery. This is about to die, maybe. And at IPA, we have a research program on interoperable payment systems supported by the Bill and Melinda Gates Foundation. So this is a 4-year research program studying instant payment system, interoperable payment systems around the world, including TIPS in Tanzania, ROST in Pakistan, InstaPay in Philippines, UPI in India, and beyond. So we're very much looking at inclusive payment systems in a comparative perspective. And we have indeed just released a white paper that outlines our thinking about how to study the impact of instant payment systems and whether they are inclusive or not. We wanted to call these FIRPs, Fast Instant Retail Payment Systems. We thought FIRPs was kind of catchy, but then Steve's influence weighed in, and we thought, yes, let us stick with instant payment systems, and then we can test whether in fact they are having inclusive outcomes. So the report, the white paper, to think about, well, what type of impacts does an IPS system have? We have to think about a theory of change. What would we expect? How might we expect these systems to change, economic transactions, to change people's behaviors, to change investments? So we think through a theory of change, and this connects with the larger economic literature in finance and development economics. And then we think about the interface of this research, academic research, with policymakers. And we're very much interested in engaging with policy stakeholders, policy community. What do you want to learn, right? What do you think are going to be, sorry, I keep moving. What do you want to learn? So we're very much interested in engaging with policy makers. And then at the end, we do lay out a framework for monitoring and evaluation, which gets into some important questions about measurements, right? Is a transaction actually on net or off net? If so, does that matter? Why and how not? Why not? Okay, so what I want to do today is I encourage you to check out our white paper. Very happy to engage with you about that. I'm going to kind of talk about some of the key themes in the white paper, but engaging with some of these questions that were motivated by the slide. So we've already talked about what are inclusive instant payment systems. I'm going to focus on more why they matter. Right? Why are we all here? So it's really a great opportunity as research and development economics to talk to people on the technical and technology side, because we think very much big picture, right? What is, the impact? Why do these systems matter? You are very much also thinking about these things, but from a very different perspective. So it's great to have kind of, develop common framework and language for talking about this. And of course, when we understand, well, how did we get here? We have to think about, the history of interoperability. And we do this a little bit in the white paper, and I want to talk about that just a little bit, and then we can get about thinking a theory of change. So we've talked about inclusive instant payment systems, what they are. We don't need to come back to this, but I want to think about why inclusive instant payment systems matter, right? And ultimately, these are systems for improving social welfare, right? And how are we improving social welfare and productivity? We are expanding the scope of economic exchange, right? We want to make it easier for any given person to make a transaction with any other person, right? No matter what financial service provider that they're using, no matter what technological instrument they're using, no matter where they are in the country. We want to expand the scope of economic exchange, right? To make everyone better off from gains from trade. But of course, as we want to expand the scope of economic transactions, that increases enormously the transaction and coordination costs of doing exchange of people using all kinds of different FSPs, people from all over the country, right? Using different technological instruments. You all know this. You've been thinking deep and hard about this, and you know this all too well. But this raises some enormous costs. And this is really, I think, where we see kind of when we talk about impact, it's like, how do we devise and design and implement a new system that brings down those transactions and coordination costs that then allow for an expansion of economic exchange? And that's what we want to ultimately think about that. So when we think about this, actually, we can think about money itself, right? When we think about money as a medium of exchange, it itself is an interoperable technology, right? Its invention was to allow for interoperable transactions, right? And we think about this because when we think about before money, how did we do exchange? We did it from barter, right? So I raised sheep and you cut down trees and created wood, lumber for building houses, right? And I want to build a house and I need lumber, but I have sheep to trade with someone who has lumber. The problem is, to acquire lumber, I have to find someone who wants sheep, right? And that's very costly, right? I go to Steve, I say, Steve, I got some sheep. I know you have lumber. Do you want to trade? He's like, no, I don't need sheep. So then I have to go somewhere else, right? And I go to Miller, and he says, well, I just exchanged lumber for sheep yesterday, right? And think about the transaction costs of trying to find someone who is able to exchange, do a trade with me, right? So this is the double coincidence of one's problem that I'm sure we all remember from our economics classes. And so money, having a currency, a medium of exchange that we all accept, dramatically reduces the transaction and coordination costs, and then it just transformed the scope and speed of making economic transactions. And, I think it's important to come back to this because essentially what we're trying to do is help to overcome and reduce the double coincidence problem, right? I'm on Vodacom, you're on CRDB, I'd love to do a transaction. I have American Express, you only take Visa, right? These coordination problems arise over and over again, and they create an enormous friction and costs that are very economically harmful, right? So, and I think it's useful, and we're keen in our report to think about and this is also inspired by the L1P project. We have to be as good, if not better, and we can be better than cash, right? And when we think about, well, why are people so wedded to cash? So it was this incredible invention that solved this interoperable problem, but it has a number of really amazing attributes, which gives it its staying power, right? So it's an interoperable, right? I can trade, I can use cash to purchase a good from anyone, and we have to have no prior relationship, right? And it's instant. I give you cash. You as a merchant, you now have the cash, and it's yours. You can reuse it immediately. It's irrevocable, right? Once I give it to you and make a payment, it's very hard for me to get it back, right? Unless we do another exchange. It's low cost, seemingly, right? There are no, seemingly direct transaction fees on cost, but of course we all know there's an enormous cost. And then it's accessible. So, once we have this intervention, it has this staying power because of these attributes. And it's no coincidence, of course, that the L1P project says, this is, what we are up against, but we can do better. And I think we like to think about this conceptually, but also empirically. That is, in measuring impact. Are people using the interoperable payment system more than they're using cash? That is a very valuable benchmark, and that helps us to measure demand, right? Our interoperable payment systems eating market share of cash. So in Tanzania, of course, mobile money for remittances is, far outpaced cash, but it hasn't done so in retail payments, right? And that points to a problem of a dual economy. Now, of course, there are all kinds of costs of cash, enormous costs of cash, right? So if I'm going to do long distance, commerce, it's risky, clunky, and inefficient to have to lug large amounts of cash, right? Especially as payments scale, very inefficient to use cash. It's a costly way to save, right? Especially in inflationary times when I have money under the mattress. And then, with no paper trail, great for criminals, but bad for upstanding citizens who have developed, a very reliable and would be happy to store their money or take a loan from a bank because they will repay that, making everyone better off. So the financial innovation has been, how do we overcome these problems with cash, right? And that is the history of finance. So, very costly to save cash, very costly to make long distance commerce. So we get the emergence of banks, right? And banks store your store gold, and they write you a receipt, and then you can trade that receipt. They can then loan out the gold you store with them to someone else, right? And the modern financial system has massively increased the scope of exchange over long distances through all these financial innovations. Credit institutions, settlement banks, credit cards, debit cards that we're all familiar in online banking. But this is done so, of course, on the backs of an elaborate, costly and bureaucratically intensive infrastructure, right? And what are the consequences of that infrastructure? Well, it reduces accessibility, affordability, speed, and interoperability, right? So the solution to some of these costs of cash have put us back in a situation where we don't have inclusive instant payment systems that we had with cash, right? And that's here we are. And that has given rise that we're all too familiar with this, with dual economies, right? So some are willing to can afford to bear the costs of using formal financial institutions. Some have access. Some, have the identification requirements, and then many do not, right? And so they are operating in the cash economy. So how do we bridge this dual economy? And which is really where Mojaloop, the L1P project, is coming in. And as Steve said, it's just amazing over the last 5-10 years, the transformation we see where you have the emergence of these instant payment systems. And some are not intended to be necessarily inclusive. Some are not necessarily trying to bridge this dual economy, but in fact they are, as we see with UPI in India. So now that we have the emergence of these systems that are trying to bridge the dual economy, are they, right? What are the effects and the impacts? And that's what our research program aims to do. We want to quantify the impacts of IPS, right? So this is a big question, a big challenge. How deploying new open loop financial systems with near instant interoperable payment systems functionality might transform emerging economies. And this is obviously a very complex, big question because this is a system level change, right? You are building financial systems that connect so many different FSPs, actors, government, all onto one system. So many interconnected and moving parts. So in our white paper, we have tried to make it more tractable by thinking about constituent components of this IPS, right? But I don't think we should lose sight of the big picture and the system level effects. And this is an incredible opportunity to see what is an economy look like before the advent of inclusive payment system, and what does it look like afterwards? And this is a transformative potentially change, and we shouldn't not try to study that, right? Now, we can't learn these system level effects unless we measure them, right? So we are also putting out a plea and a call for data, more granular data. And we go beyond the number of transactions in a given year, right? It would really be great to know the number and type of FSPs integrated, right? And thinking about systematically who is included and excluded. It'd be great to get a disaggregated data on on-net and off-net transactions, especially geocoded information. I think one of the consequences of the rise of the formal financial sector has been incredible geographic concentration and segmentation. Think about the rise of banks or MNOs. They geographically specialize in certain regions, right? Tanzania is a great example, and that is efficient for that FSP to double down on one region, right? Very efficient for them to do so, but it creates silos for the economy. And it hurts economic integration, and it hurts the potential scope of economic transactions. An instant payment system has the promise of breaking down those silos and increasing transactions between different FSPs, right? That's ultimately what we're trying to do. Are we actually doing that? Are we seeing that? But to see that, we need the data, right? The transactional data, by an FSP, the sender, the receiver, what FSP that they belong to, where that transaction. This is all anonymized data, but it'll help us show the patterns. And even great if we could do this before and after the launch of an IPS. Right? I mean, we're basically making an advance, from cash to a former infrastructure intensive economy to a digital economy. What does that look like? This is really important, in terms of, financial history. Okay, so now when we think about impact, we have to think about how might we expect impact. And here again in our white paper, we go from system level to think about, well, who are the constituent actors, right? And of course, we have financial service providers, key actors. We have merchants, households, government. And we think about, who are these different actors? What are their requirements and needs for financial services? How do they interact? And then we think when we have an IPS that is instituted and implemented, what are the different phases of integration? And we think through these different phases and what type of changes the different actors that we've identified will undergo as they integrate and adopt, as they start to shift their behavior, through integration, and then the most exciting part, dynamic market changes as we get interactions, coordination around new equilibrium. And so in our white paper, we detail these different phases and think through theoretically how might these different phases lead to new economic, social behavior and market outcomes. Okay, now I just want to conclude thinking about two hypothesized impacts and then how we might study them. So yesterday, we all had, the pleasure of doing the walk the loop, to see digital financial services, in action. And it was a fantastic opportunity to get to know each other. And so I was with Jacqueline from CRDB, the largest bank in Tanzania, and we did a couple transactions. We did a merchant payment, and then Jackie also did a cash out, right? So she had digital money on her mobile money wallet, and went to a wakala to cash out to receive the cash, right? And this is very common transaction in Tanzania, the cash out. But this is very costly transaction, right? Because think about, this is going back to our double coincidence problem. So first we say, well, why is Jackie doing the cash out, right? Why does she need cash in the first place? She probably needs cash to make a retail payment, right? So she is having to find a wakala, right? And for some people, that is not, let me zip around the corner and find a wakala. That is, let me walk 30, 60 minutes to the wakala, right? Let me go to the wakala. The wakala doesn't have float, right? I have to find another one. They don't have, my provider. I have to go somewhere else, right? And then I get the cash, and there's, a charge for cashing out. And then I take that to then go to a merchant to pay for a good using cash, right? So this is the coordination problems that arise, right? Where we have a dual, kind of economy, right? Now this is tremendous because Jackie can receive a remittance from someone living, in Dar es Salaam to go buy medicine, but she has to go through this transaction cost to then use it to make a retail payment in cash. So Tanzania is primed, right, to make this transition where the wakala and the cash out is superseded by a Moja loop, by an open loop, instant inclusive payment system, right? And this is an example of the coordination costs and transaction costs that we see driving down, right? A real-time example. And so what we want to do is study, do we actually see with the introduction of an inclusive payment system that transaction costs are being reduced? And then what are the kind of the economic impact? So let me just talk about that through how we would study whether we actually see this and what are the economic outcomes. Study this, we use randomized control trials. Again, we want to study things at the system level, and we want to look at macro level changes, absolutely. And if you're interested, let us please talk. But we're also interested in making this tractable, right? And causally identifying the impact of an inclusive payment system. And to do so, we use randomized control trials, right? And now RCTs are an incredible technology for learning because they give us causal identification, right? We use random assignment, right, to have a sample of markets. We use lottery. Some get assigned to receive the treatment, and some don't, and they're the control. So on average, these markets are identical, except for some get treatment. And our treatment's going to be an inclusive instant payment system. And I'll talk about that just quickly. But so the RCT is a powerful tool to learn the causal impact of our intervention. But I want to also make a pitch for RCTs as a diagnostic tool, right? What is actually going on when we have implementation of an instant payment system? RCTs give us incredible insight into compliance, adoption, use, and how these systems are being used. So when we think about an RCT for instant payment system, so let's say TIPS is being launched, right? It's being implemented, but and let's say the P2M use case is now live, but a lot of merchants aren't familiar that that TIPS is live, right? And they don't know about it. So we can leverage this moment where the system is live, but there isn't a lot of familiarity, where we can randomly we can have a sample of, let's say, 100 markets, right? And we randomly select 50 markets to be our treatment and 50 to be our control. Right? On average, these markets are identical, except for 50 are now in the treatment. And what are they getting? They are getting an intensive marketing campaign. Tips is live. Here's what Tips is. Here's how it works. And then we go to individual merchants and we onboard them. You know, we make sure they're integrated in the system. We make sure they know how the system works, how they can use it, how they can make transactions and payments and accept payments, no matter what FSP a customer uses, right? And this is where we see our diagnostic tool. You know, we have to go and talk to these merchants, onboard them. Are they understanding the system? Are they actually using it? Are they complying? How are they using it? Are they just making more transactions, or are they now making a lot more off-net transactions? This gives you an incredible insight into how these systems work. And then we can, after doing the onboarding, we implement, the intervention, and then we can go back over time and see not just the effects on actual use, but here we're getting into impacts, right? Is it reducing transaction costs, increasing consumer welfare? Because Jackie now doesn't have to go do the cash out, then do the retail payment. She goes straight to do the retail payment, right? And then we can look at the merchant side, the merchant profitability. All right, I'll leave it there. Thanks so much.
All right, thanks a lot, Phil. Can you guys, is my mic on? All right, we'll stick with this now. All right. So now, thank you, Phil, very much for that. And I think, did I not promise you an existential session? I think I want to quote one thing. Let's think about what money is. Like, that was how Phil started us off. So yes, that was an existential session. Thank you very much. The other thing he talked about a lot was on cost. And I think that was part of the discussion of what is Mojuloop's advantage that I really want to focus on. Yes, lots of innovation, but lots of innovation that really focuses on how do we bring down the cost? Now, how do we bring down the cost for the hub operator so that they can offer a very low cost system? The other thing he brought up that I think is incredibly important is the focus on merchant payments. We have really focused on P2P and remittances for very good reason for many years. We really need to nail down merchant payments in the next iteration of what we're doing at Mojulop. I think he gave a lot of good reasons for that. The last thing I want to do is reiterate the call he made for data. In order for us to be able to measure these things, we have to be much more open about the data that's coming out of hub operators. So if you're a hub operator, please do think about how you can be more open and sharing in your data, but not just because Phil wants to analyze it, also because Greg wants to analyze it to improve your fraud and risk management. And because your business people want to analyze it so they can more effectively grow the number of transactions and the revenue coming into your hub. And your policymakers like Sajib are going to want to analyze it so they can understand if we are complying with all kinds of CTF and AML requirements and we have a good control over our economy. Data is important to everybody, not just those that are measuring impact. So as you analyze, as you design your systems, please think about how you make sure that your data is available to more people. With that, I've got you over and we're going to go into a break. Please be back in, all right, go ahead.
You might have noticed some power fluctuations. If you're plugged directly, please unplug and plug into the power strip. And then thank you for your help there. And quick break, we'll be back in 8 minutes.